So this is how I personally view OBs. So let's go to the 1 day of this daily. So we have this OB, large OB here. So how do you choose a OB that is, this is the term that I would use, a good quality OB, or how do you find a good quality OB? Which meaning a good quality OB could give you more accuracy or more probability for price to bounce from that certain area. So what I would do is, the question is, let's say price is currently at this point. So what OB would I choose for price to bounce? So we have two OBs. Now you have to look for certain criterias. First, an OB must be unmitigated. So how do you know if an OB is mitigated or unmitigated? So if you see here, as soon as price went above from the close of the OB or the high of that certain OB, as soon as price goes above that, then the certain OB is ready for mitigation. So price could then just tap it a little bit, then push higher, meaning the certain point of the OB or the has already been mitigated. A good example for that is on this EU, the lower one. So if you look at this, technically, I think it's the 30 minutes. Oh yeah, there it is, the 30 minutes. So I have the 30-minute marked up, this OB right here. So as soon as price broke above it, so let's just replay it. As soon as price broke above it, then it's ready for mitigation. So if price closes above it, or price went above that certain OB, then this OB is ready for mitigation. So any tiny price touches or even deeper touches, it has been already mitigated from that certain point or that certain retracement or touch. For example, this one. So price touch moved above this, meaning this OB is ready for mitigation. After price went above that OB, price then went below to mitigate this OB. So went below the 50%. So how do we know that? Why do we stress that the 50% of the OB is very crucial? Because what the institutions has been doing is, to create this certain down move, they would sell at the certain order, sell. Then at the 50%, they would sell heavily, sell, and take all the sells to push higher. Then to also grab liquidity from dumb money and other small banks. To grab the liquidity, then they would start buying heavily to fulfill their plan or their certain price movement or the order flow. So if we look at this certain OB, towards this specific OB on this specific time frame has been already mitigated, since price went above the OB, then shot down back to mitigate those OB. So basically, to close those multiple sell orders, to close them, because they don't want to close at a huge loss, so they close it at break even or at a small loss, then push price higher. So currently this OB is for me has been mitigated, fully mitigated, since it already got touched by the 50%. So let's go back to the EU. Wait, how did we get? Okay, the 1 day. So let's do the replay tool. So what OB am I more confident on? So first, we need to check if an OB grab liquidity. So did this OB grab liquidity? Yes. So if you look at this swing low here, on lower time frames, that's a huge swing low or a huge lower low. Meaning, on lower time frames, it could look like this: double bottom, then price. You see this huge order block here. Then price pushed heavily to liquidate those retail traders who are buying at the support line, has stops below it, then has also those breakout traders who has sell stops ready. So if you look at this OB grab liquidity, so good, that's a nice OB. Also, this OB was the starting point of this bullish leg, which this bullish leg broke these certain structures, these minor structure here, and liquidated those who have been selling from this resistance point, and also has stop losses in there. Basically, it got liquidated. Also, for me, I see this as a break of structure. So at this point, this OB is very high quality since it liquidated those people here. Then maybe on the far left there could be imbalance there, so this OB also filled that certain imbalance from that side on the past price. Also, this OB started this huge move up, or the leg up, and broke structure. So let's just say the quality of this OB right now is 90%. The quality of it is 90%, or 9 out of 10. Then what quality would I rate this? So this OB was formed before it broke structure. So I would say this OB also has very huge importance since price went above, pushed, then stopped from here, basically liquidating those people here on this certain zones, also filling those imbalances, then pushes higher to break these structures and these structures. But remember, this OB, certain OB here, is not the starting leg of this huge move up. Or also, this OB was the reason for a shift in order flow, because we see a break of structure here, price book structure here, so we're expecting price to move higher since from the past we were currently bearish on EU. So go back here, we mark those up. So I'll say this OB is 90%. This OB is roughly 70%, which is still good because it broke structure here, liquidated those people on the smaller time frames. But the reason why it's lower quality, since it's not the starting point of the huge or the impulsive move of price. Now the question you asked is, which OB do you choose? So let's go on a clean chart. Wait, let's go back. So this is how I personally look for OBs. So let's just mark this up. We have this OB here, POI, then we go down lower. So let's start on the 4-hour, my bad. So in the 4-hour, so we see price tap this large POI, so we're expecting at least an order flow shift in this specific time frame. So we see breaks of structure there, so I'm looking for buys in these areas because you want this to do, or for structure to do this type of move. So then I would look for an OB. So what I would do is go in a higher time frame, mark this out. Oh, this OB is very good because as soon as price went above it, it didn't go back down and mitigate it. So this certain OB is unmitigated. Also, I forgot to mention that, and it also gives good quality, or also adds quality for an OB, that after an OB has been formed, there is a imbalance after it. Because what the big banks has been doing is they've been buying slowly, slowly, then bought heavily on this certain OB at the 50%. And after that, oops. Then after they bought heavily and aggressively on this certain OB, they then basically they bought up to liquidate those people here to grab some money from dumb money. Then they pushed heavily. And that's why imbalances form after a OB has been filled, because price has been pushed down aggressively by the big banks. So basically, after this OB, after they bought heavily from this OB, they then sold more heavily, to push down more. That's why we have imbalances here, because there's no, this is what we call a imbalance. Basically, from this wick to wick, we have this huge imbalance where there is no fair price. Basically, it's just mostly sells. That's why it's not fair, because we don't see price to do this. Basically, seeing price to do a push up, or basically buyers pushing the market up. That's why we don't have candles forming. We don't have a bullish candle forming. So basically, the sellers are in control, or the big banks are in control of this certain move. They bought heavily, meaning there's not enough buy orders here. That's why imbalances form, because after they bought heavily, then they push down to continue their plan or the certain order flow. So let's go back to the topic. So I have this 4R marked up. Looks good. It's unmitigated. We also have this tiny imbalance here. Then we go down to a 2R to refine it. And what do I see? It's the same thing. We have this OB here, then this open, then to this wick. We also have imbalance, which is still good. Then I still want to refine it since I'm a scalper. We go to the 1R. Then what do we see? Oh, look at this OB. But look what price did after it formed this OB. Price went above it, then pushed down. So basically, but here's the thing. Price didn't push down to the 50%. As you remembered, the 50% of the OB is where the big banks bought or sold heavily on the market. So most of the orders are in the 50%. That's why price sometimes goes back to mitigate at least the 50%, since most of the orders lie on the 50%. So what do we see? Price didn't technically go below the 50%. So meaning the 50% of this certain imbalance, and remember, the larger time frame imbalance was here. I'll just delete this bigger one. The larger time frame imbalance was here. Then we refine it, and remember, this was the 4R imbalance. This is the 4R imbalance. If you measure the 50% of this 4R imbalance, 50%, remember? 50% is where most of the loader orders lie. Then if you see this red zone, this is the 1R. It's aligning, or this is what we call correlation to the larger time frame. So the 50% the larger time frame is within the 1R order block. So we go back to the 1R. So we have correlation. So I'm a little bit confident on this 1R OB, even though it got mitigated. So technically we can just mark up the 50% of this OB, since the open of this OB already got mitigated. So we have this 50% still open, still aligning with this 4R OB. Then we go lower. Let's go to the 30-minute so we can refine it more. What do we see? We can also mark this up, but as you can see, price went above from that zone, then pushed down heavily. So it even pushed down on the 50%. So basically, this 30-minute OB has already been mitigated, since price went below the 50% of it. So the 30-minute OB has been mitigated. So we look for another OB on the lower time frames. What about the 15-minute? So we have this OB at the bottom which hasn't been mitigated yet. So you can look for it. You can have this mark up. Then we check at the higher ones, this OB. As soon as price went above it here, it went down heavily to mitigate the 50%. After mitigating the 50%, it also formed another OB, which is this one. But after priced or the banks made that OB, it pushed higher, meaning it's ready for mitigation, or went above that OB, it's ready for mitigation, but push it down back heavily to the 50%. So technically, this OB is already dead. And same with here. This OB already got mitigated. Price went above that OB, then pushed lower. Even went below that OB. So basically, these zones here, above these zones, has been a choppy market or a fair market since prices has been mitigating. So basically, all of the order blocks within the zones has already been mitigated because price did a certain pattern. So, but we can go to the 5-minute. Then what do we see? This is how you refine. This is how I refine. What do I see? I see this tiny OB here, but sadly price went above it, then mitigated this tiny OB. So technically this tiny OB has already been mitigated. So we can go to the 3-minute, look for another OB. Then what do we see? We see a tiny OB here, this one, which hasn't been mitigated. Oh, it has. Wait, POI, which already has been mitigated, but you have to also remember we have imbalances here, but you have to also remember that we have this larger time frame OB, this zone here. So this already got mitigated, but we can say that this imbalance can play a role. But also remember that inside wicks are OBs. So to prove that to you, we see a wick here. If we go to the 1-minute, we see an OB here. After it mitigated the open of it, it went higher, but remember that the 50% hasn't been mitigated yet. So we can refine this. We can move this POI here at the 50% since price didn't go from the 50% of this OB. So we have this imbalance and OB. So basically what I'm doing is refining my POI at the same time, looking for correlations on the higher time frame. Basically, what I did, I have this 4-hour POI or order block. Then I looked for a more refined POI where price could probably go down and touch that certain POI, then move higher, or certain OB to mitigate it, then push higher. We have this 4-hour OB, push down lower, look for a valid OB which hasn't been mitigated. So we have this, I believe it's a 30-minute or a 1-hour OB, it's larger zone. After that, this is just the 50% of that large zone. After that, I went lower to look for zones which hasn't been mitigated. So we have this tiny zone here in the 1-minute, then we have a 3-minute imbalance here. So either price can go lower, and so there's multiple ways what price can do. Either price can just respect this 4-hour OB, then push higher, which basically just touches the open of that OB, or price can go lower to the 50% of this 4-hour OB, which is nearly aligning with this, nearly aligning 50%, so somewhere here, 50% of this 4-hour. Basically, it's nearly aligning with this lower OB, so it's more probable for price to push lower, or we have more reasons now to align or to formulate on what price will do on this certain moment. So either price can touch the open, push higher, touch the open of the 4-hour OB, or go lower to the 50% OB, or it could fill those OBs at the lower time frame, or even just this 30-minute or 1-hour OB, this red zone, and push higher. So basically, we're just looking for stories on what price might do, or what the banks might do, or we're looking for stories where it makes more sense, you know? Okay, so we're just looking for a reason where it's more logical, okay? So this price want just to mitigate this zone, then push higher just to mitigate the open of this 4-hour OB, then push higher and leave those large losses down, or just accept those losses down? Or does it make more sense for price to push lower to mitigate those open positions, or basically those OBs, to mitigate them, then push higher, basically reducing their losses on that certain position? So we're just looking for logical reasons which could make sense, which is more cost efficient for them, or basically whichever way that the banks could make more profit or less losses. So basically it's just like top down. We look for reasons where it makes sense for price to do. So it disappeared, but I had a POI here. I think I deleted it. Wait, I think it was... Wait, let me check. 30-minute. Oh yeah, 30-minute. No, 1 hour. I believe 1 hour. Oh yeah, it's the 1 hour. So I have this POI, this 1 hour, but price went above it, mitigated the open of it. So basically, the half. This is how I view order blocks. Basically, the half of this OB has been mitigated. So we still have the 50% of this OB, which is roughly around here. So I have that POI because I'm expecting price. If price doesn't hold from this area and push higher, if price doesn't do that, then it wants to do a larger pullback, or basically on the 1 hour and the 4-hour time frame, it hasn't done a pullback yet. So I'm expecting a pullback to this region, or this unmitigated part of the OB, because probably price wants to close those open positions or losses and then continue higher. So I think it's the 4-hour. If you look at the 4-hour, go on a cleaner chart. So if you look at the 4-hour, price hasn't really had a pullback yet. So that's why I have it marked. I have a POI marked there because I'm expecting price to pull back, then push higher. So if I lose right now in EU, oops, my bad, this one, then I'll just look for another entry, because it's either you win some or you lose some. Then I got hit on my trailing stop on this one. So I'll explain why I chose this OB, but I could be wrong, because this is how I do it. I look for structure. What is structure doing? Higher high, higher low, higher high, higher low. Then I'm expecting another higher high. So I'm looking for an OB on these zones. So that's why let's go on a cleaner chart. So I'm looking at an OB on, so we're expecting this higher high, higher low, higher high, higher low, high. So we look for OB within these zones. So if you look at price here, I think I started on the 1 hour. If we go on the 1 hour, what do we see? We have this large OB here, which already got mitigated. Price is going down from it right now. Then I went to the 30-minute to look for refinements. Oh, this OB looks good. It's more refined, also has imbalance, but recently got tapped. But imagine we haven't tapped it yet. So I'll just reverse it. So price, good OB, hasn't been mitigated yet. Also have imbalances here. Then we go for a more refined entry. The 15-minute, oh, this 15-minute looks good, but it got mitigated. on the open. So basically this zone has been mitigated already because price went above it, then went below it again to maybe mitigate some orders, then pushed higher. So technically this zone is still valid because remember, you still have the 50% not mitigated yet. Then we can go on the lower time frames. Then what do we see? We see an OB here, but price went above it, then tap the open of it. So basically this OB is still open to 50%. We can have that OB stay there. We also have this OB which Ment FX calls it OB 2.0. Basically we have a first order block here, then basically we mitigate this first order block with another order block. So first order block, second order block, hence OB 2.0. Then I think I went to the 3 minutes. Then I looked for the two specific zones. We still have a valid OB here and a valid OB. So it's aligning with my story. I'm happy with it. So basically, let's go back to the 5 minute. So basically we have a large OB zone. Then we look for inner zones where it's reasonable for price to go down from it to mitigate that zone, then push higher. So we have this zone's open, this zone's open. So either price can just touch the open of this OB and push higher, or price can go lower, touch this OB, go higher, or touch this OB, go higher. Either way, I have this blue zone as my general lookout on the zone or the OB. Then we see price here. Price reacted from that zone, mitigated this zone, so this zone has been mitigated. Then we look at the zone. Price reacted from that zone because we have a lower time frame unmitigated zone. But also remember, you can't just be refining all the time. What I mean is, let's just say we have a 1 minute OB here. Let's just imagine we have a 1 minute. Basically, the smaller the zone, the less probable for price, because let's say price is here. So let's say we have a refined zone here. So basically you have trade-offs. So if you choose this tiny zone, it's less probable for price to trigger your entry. What I mean is, price could just either tap the open of the OB, then go higher, or either tap the 50% of this larger OB, then go higher, or either just even go lower on the 50% OB and go higher. So basically, that's the meaning of it's less probable for price to activate or trigger your entry on that OB. But okay, basically that's the cons. But the pros is it's a better RR since it's a lower zone. So you have to choose the pros and the cons, or you have to choose on two different things. So either if you keep refining it, it's basically more rare or less probable for you to take trades since it's a smaller zone, or it's a more refined zone for price to hit it, for you to get activated on your pending order, but it's better RR. Then the other option is, if you choose this zone, it's more probable, or you choose this larger zone, this blue zone, if you choose this larger zone, it's more probable for price to activate your entry. But the cons is basically you have horrible RR since it's a larger zone. Then let's say we can compare it. If it's a larger zone, then let's just target this certain high, liquidity high. It's a 2-to-1. So it's more probable for price to tap this OB, then go higher. Or basically it's more probable for price to activate your entry or your pending order. But you have horrible RR. So in the low 2.2 RR, then we choose this refined zone, option 2. Let's just make this option 2. It's less probable for price to hit this zone, since it's a small zone, it's a tiny zone, it's a very refined zone, so it's less probable for price to activate your pending order. But basically, it's better RR. So compared to the other one, which is a 2-to-1, this is a 17-to-1. So you have to choose between, do I want better RR? Yes. Okay, I'll want better RR, but you have to accept the cons, that it's less probable for price to activate your pending order, or it's more possible too for price to shoot down below it since it's a lower zone. Basically, shoot down below it to mitigate this lower part of this larger OB, then push higher. Or do you want a safe zone but horrible RR? So this is when you would choose this larger zone. So yeah, that's how you have to keep, that's what you have to keep in mind when refining your OBs.